Building a portfolio for investments is tricky business. You have to find the right stock at the right time, at the right price, and hold it for the right length of time to make some real money. So let me start off by just setting those parameters for you. The risk premium is going to be medium, which basically means that if I hold this portfolio for long enough, I will at least get as much returns as Nifty. Mera paisa dubega nahi. It also avoids penny stocks but does invest in mid-cap stocks with high conviction. I will also be using high dividend stocks, which should increase my annual returns and if possible, reinvest that in the portfolio. Now here's the largest split for my 3.5 crore portfolio. Dividends are going to be 40%, growth stocks 20%, and 40% I'm keeping for trading, which I exclusively do in futures. Now the third part is not essential for everyone, obviously, since I'm a full-time trader and investor. For me, of course, I need a decent amount of capital to make good returns. If you are someone who's just a long-term investor, forget about this extra 40%. Just split your portfolio into 80, 20, and you're sorted. So in my case, if I'm starting with 3.5 crores, then I'll be investing 1.4 crores about in dividend stocks. And when I say dividend stocks, I don't mean companies that don't give you any return over 10 years. I mean companies who do give you a decent cargo, but also have a very good dividend payout ratio. At the same time, these companies have cycles. So I'm going to be buying into them at the right time. For example, Axelia Solutions is a company that works in providing IT services to the airline industry, and they're a very good company. They also have a dividend payout of about 6 to 7%, which is very good considering it's a private company. Now, this company also gives you decent returns if you buy into it at the right time. So over this longer time chart, if I had bought into Axelia Solutions somewhere in 2019, mid-2019, I would still be making very good returns because I bought into the stock once it had corrected a lot. To the contrary, if I bought into the stock in 2017, I would still be crying over it because, well, it would have given me negative returns over 6 years. So for dividend stocks, especially stocks that pay pretty high dividend, you have to time the stock very well. You might have to wait, and I'm ready to wait. I'll show you all the stocks and the price entry point that I've set for each of these. So for Axelia, I'm going to be entering at about 1100. Even right now, I feel decently comfortable given the dividend payout. But because I see that the market should correct a bit more, I'm ready to wait. Similarly for VST Industries, I've already bought in around 240, 245, and this is a very good entry point for me. It's a multi-year support, and if it falls more, I'll just buy more. This company is going nowhere. It gives out a decent dividend. So if nothing else, I'll just keep eating the dividend, and someday it'll give me a 40% return. That's when I'll be happy to sell. Now, Hindustan Zinc is a play on metals. Now, I'm not sure if we're in a super cycle or just a normal business cycle for the metal sector, which is why I want to have some exposure to it, and zinc is something that will be essential going forward over the next 5 to 10 years, which is why I'm going into this company. Decent dividend payout. I don't expect to give me returns, but if it does give me returns, it'll give me a 5-bagger return. So this is more of a bet that I'm making with the safety that I'll at least get dividend. A similar play is NMDC, which is multi-metal. So again, it gives me good exposure to the metal sector. So in case we're in a super cycle, I can take advantage of that. And again, I get good dividends. Now, GAIL is a stock that I am really a fan of because it gives you both returns and a good dividend payout ratio. And given that for data centers and the whole AI boom, we will need a lot of power, a lot of which might come from the gas sector as well. There, I think GAIL is probably the best play to make. GSPL is also a very good stock, Gujarat State Petronet, but I'm not going into it in dividends, I'm going into it in growth stocks because I see that stock really rising going forward. Then we have ONGC, again, power play because we know that oil and natural gas both will be very essential going forward. The green revolution is going to take some time, and I'm investing thinking that at least 5-10 years I can eat some dividend, make some profits, and then if needed, I'll switch. For the green sector though, I also have IRIDA, which covers the entire green sector. If the India's green revolution does happen, IRIDA will profit. It has got good management, it's under government ownership. Right now, it's not paying dividend, but given that again, it's a PSU company, eventually dividends will have to come in. Now, there's only one REIT in this entire portfolio, which is the Embassy REIT, and the reason I'm going for that is because it's by far the most powerful business park brand, at least in South India. At the same time, its dividend payout seems to be higher than the rest. I know that this stock is also cyclical, so I'd like to buy in at the right time. As you can see, I'm waiting for it to get to that corrected point. And the same applies to ITC. Good dividend payout will give me some growth as well. It's a safe stock to buy into. It's a stalwart. So again, go in, but at the right price. And OFSS is a company that I'm very interested in. Whenever I go into technology, I'll be starting with Oracle Financial Services. The idea being that Oracle is a larger player, is expected to do really well going forward. With the whole AI boom, Oracle has managed to capitalize better than most other conventional companies. So if I'm investing into any IT stock, that stock for me is going to be OFSS first. Not Infosys, not TCS, not anything else. OFSS it is. And a good dividend payout ratio is simply an icing on top. As we move on from the dividend stocks, we get to the exciting part of this portfolio, which is growth stocks. And there I have a bunch of names that I really like. Starting off with Ether Industries. I've talked about it a dozen times. If you are building a portfolio for the next 20 years, you have to have exposure to the chemical space, being in India. And within the chemical space, I would argue that Ether Industries is the best long-term bet, no competition. Excellent management, they have a moat around a bunch of chemicals, they are expanding and they'll continue to expand, there's plenty of institutional interest, everything that there is to like about a firm, they have. So if I'm going to invest in any chemical company, the first of it is going to be Ether. It's available at crazy good prices, so I'm buying here and I'll keep accumulating as it goes down till something changes fundamentally. The second is a play from the medical space, which would be Rainbow Children's Hospitals. I know that I just had a kid, a bunch of my friends have had kids, plenty of people are getting married, so yes, we will have a lot of demand coming in, even though there's a lot of people not having babies in India. Secondly, we know that now we are much more careful about a baby's health than we were before. We're not using those homeopathic medicines and then home treatments anymore. We want to go to doctors, we want to be more specific about how we're treating our children, which is where I think that this field should grow very fast. Cloud9 and Rainbow are the only two good names that I know, and Rainbow is the only listed player, so there we have it. Then is a play in the high-end computing space, which would be Netweb Technologies. Sadly, I bought into it at a very good price, but sold it once I got a good return because I thought the market was going to crash. Big mistake. But I hope it crashes again and then I can buy it. A good entry point would be somewhere around 1100, 1200, I think. And I'd accumulate it and just keep it for the long term. Same applies to Irida. I get it around 100. I'm going to buy it. I'm going to hold on to it. Never sell it. Mostly I'll get dividends as well. If not, it should give me a good return anyway. I already spoke about GSPL. Brilliant company. The merger should help as well. So a company that you should have in your portfolio, given that it's safe, it's state sponsored. And then we have Nazara Tech, which is a very next gen company. Now gaming is sort of faltering in India because this current government has a certain perception about this field. But I would argue that this government is probably not going to stay for the next 15 years. I don't see a successor to Mr. Modi. Of course, there is no challenge as well, but something is bound to change. If not for a change of policy, just for the fact that they'll have to become more accommodative of modern trends. I think gaming as an industry might see good things happen in the future. And Nazara Tech is a behemoth there. Bunch of cash in their balance sheet. They make good acquisitions. They don't go into debt too much. They're growing organically as well as expanding like crazy all over the subcontinent at the very least. I expect to see them see the fruits of all these labors very soon over the next 3 or 4 years. So again, as a long-term investment, Nazara Technologies, I would argue, is as good as Ether Industries. From the energy space, I have only one stock, which was Advait Energy, and this I think is a bit of a toss-up. This could work out really well, or this could be the one losing stock in my portfolio. But if the stock does do well, the kind of returns I'll get, I think it's fair enough. I can put in 2.5% without worrying too much about it. From the AI marketing space, we have Latent View Analytics. Again, a brilliant company. We all have heard about it. Plenty of anchors have spoken about it, so I'm sure you're aware of it. Do some more research on it. I won't give you many details in this particular video. But again, a very good company from the IT space that I would have no qualms investing in. Over an Infosys, over a TCS, any day. And finally, one more stock from the chemical space, which is PI Industries. This is a very well hidden giant. It's compounded like Bajaj Finance, but nobody really talks about it. And the space it's in, the valuation it's at right now, this is a no-brainer to keep in your portfolio for a decent period of time. No selling stock. This is just something that you leave and you sell when you're getting your kids married or maybe never. And finally, we've come to the trading split, which is 40%. And even within this 40%, I split it into two parts. A big chunk of my trading money goes into slightly longer term trades. So in futures, I'd short or I'd go long thinking about the next 6 to 9 months. I don't think I can predict the next month. It very rarely happens. Maybe an RSI divergence, maybe something's oversold, overbought, for example. Maybe it's crossing a 200 DMA that hasn't happened in a very long time. Maybe something has a pattern that has been built over 5 years. So with a small stop loss, I might go into it, but those are very rare. Most of it would be slightly longer term so that I minimize my risk, long or short. Then there's a small chunk that I'll put into for let's say the next month. For example, right now I can see that Eicher Motors is a little overbought. So I might go short on it for just a very small period of time. Similarly, TCS was a little oversold about a month back. So I went into it about 3050, I think. It's trading higher than that right now. So maybe I'll sell at the rally, maybe at 25,600 I'll come out of TCS as well. But those are a very small part and those opportunities come rarely. And there I don't play high conviction. It's a clear stop loss, it hits it, I'm out. For the longer term ones, the 6-month ones, I don't care where the price goes. I'm going to keep enough bandwidth in my money pool so that I'm not overly leveraged, so that if the stock rises or falls against my trend, I still have the ability to hold on. There I play high conviction. If I'm proven wrong, for example, if the recession does not come, if the economy keeps growing and growing and growing, then I'll have to come out of my trades, take a loss, But that would be when my conviction's gone. It won't be because of a stop loss. So that's my trading split as well. And this is the entire portfolio, right? If I was to build a portfolio that lasts me the next 15 years, 20 years, gives me good returns periodically, I can reinvest dividends, I can add to it. But this is a portfolio that I expect would grow at about 15 to 20% CAGR easily over the next 15 to 20 years.